Good evening and welcome to the weekend edition. My name is Peter Resnicek from ShadowTrader.net, more specifically at the Weekly Options Room. And good to be with you back here once again. I did a shadow short video yesterday called Ruling Reasons and the Nowhere Market, which came out early this morning on Friday the 31st. And this video was about the cross currents of news that have been coming through the market that I believe is pushing the market around in just back and forth direction and really no main trend. And that's what's going on. I call it kind of the nowhere market. So we're going to get into that a little bit in this show. I'm going to show you a new segment that I'm going to be debuting here called Ruling Reasons, where we're going to talk about some of the fundamental and news-related items that sort of were the catalysts for price movement over the course of the week. But more importantly, of course, after that, we're going to delve into the technicals and see how that parlayed or translated, I should say, onto the charts, which is what is most important. And also this week, nice segment on market profile, which I think you'll enjoy because that is also showing us a lot of WWSHD, or when what should happen doesn't, as I call it, types of movement, and that can often be confusing. So we'll interpret all of that together in today's weekend edition. Okay, let's get into our weekend review, the way we always kick off the show, looking back just for a little bit before we look forward and check out the charts. And as I was saying, this is a new segment that I'm bringing into the show, and I hope you like these graphics because this is a little sneak peek of what the new graphics are going to look like for the new version of this show that's coming pretty soon with the other studio. So anyway, I call this Ruling Reasons, and those of you who are fans of Jim Dalton and Market Profile and his teachings, you know what a ruling reason is. Ruling reason is another term for sort of the spirit of the time, or what's kind of happening at the moment that's driving the market. It could be something simple as like they just want to get it higher, or there's a lot, it can be a lot of different things basically. But I also think that ruling reasons can be broken down into daily events. For instance, like what was the ruling reason of the day, basically, and what was kind of driving the markets that day. And so to that end, I've put together this little graphic that's going to show us each week what some key events were that I felt were drivers of the market. I'm specifically also bringing this to our attention today and this particular week because this is really the focus of this week, is how these cross currents of news are just causing a lot of back and forth in the markets that we'll see on the charts, and we're not really going anywhere. We're just kind of biding time for now. So anyway, ruling reasons for the week of October 27-31. On Monday, we had a huge Sunday night gap. That's how we kind of kicked off the week. There was a U.S.-China reaching framework that will forestall the extra 100% tariff on Chinese goods. And then also Qualcomm went really higher that morning, and they debuted some new AI chips that would be competing with NVIDIA. On Wednesday, we had the FOMC meeting, and this probably was the most important news of the week in that Powell literally said verbatim, much to everybody's surprise, that a December cut is not a foregone conclusion, and then even went further to say far from it. And that was something. So that was definitely, all planned. I mean, these are not like off-the-cuff remarks. So it was kind of a big deal for the markets, and yet we didn't drop much. You would think that taking the December cut off the table, or potentially taking it off the table, would be a little bit more damaging to the markets, but not much, right? We also had some earnings from Microsoft, Meta, and Google, and there was also mixed. Microsoft and Meta down sharply, Google gapping up. And then on Thursday, we got earnings from Amazon and Apple, and both of those were up, although both stocks fell after their opens. Amazon not so much, but Apple kind of tanked right off the open and came right back down into the range that it was. All right, so these are the ruling reasons for the week. This is kind of setting the tone of what we're about to get into, which obviously is the weekend review, how things fared. So let's move over to that and see what's going on now. All right, let's get into this weekend review. So right off the bat, you see the majors on the left-hand side. And remember, this is Monday open or Friday's close. The first thing you should be noting is the small amount of change between the S&P and the NASDAQ and the RUT. The RUT actually came in quite a bit. Small caps that were a little bit weaker this week, but the S&P and the NASDAQ between Monday's open and Friday's close didn't really move much. You can see that the net change was less than 1 percentage point. And when you look at the 11 sectors, this also tells the tale, as always, because one of the major things that I talk about all the time is that you should be on the lookout for whenever, on an intraday basis and also on a longer term basis, whenever technology and financials are moving in opposite directions. And that's what you see here, where technology was actually up 1% on the week, probably mostly from those tech stocks that were gapping, and financials were down almost 2% on the week. And then beyond that, All sectors, all the other 11 sectors were down. And this also speaks very closely to what I'm talking about here and why this video is called Ruling Reasons and the Nowhere Market, because this underscores the point that basically, as XLK goes, the market is going to go. If you look at a chart of XLK, which is the technology sector, which is about 34% of the S&P, and you put it with the S&P, they look almost identical all the time. And it's crazy how all these sectors, even though they make up the other 65% of the market, it's very hard for it to actually move the market en masse. You're usually going to move how tech. And this week is no different, where the tech is up 1%. The S&P was kind of flat, and notice all the other sectors are down. So really tech, once again, holding things up. And this is also noteworthy as well that we're having this discussion, because this also confirms what a lot of people have been thinking for some time, that this is a very AI-driven market. Not that there's artificial intelligence doing something to it, but that AI-related stocks are driving this market, and that's all the gains that there are out there, and everything else is kind of sucking wind. So kind of points to that, right? You can see financials down 1.26%. Utilities were off. They've been very, very strong as of late. On the data center play, they were down 2.5%. Materials down 3.7%. Real estate got pretty beat up, down 4%. Staples have been weak, down almost 4%. So you see the theme here, basically. All right, bonds down just a little bit. Yields up, obviously inverse. VIX up about 11%. Sometimes that can be a foreshadowing, but I don't think it's enough. For the VIX to be up 11% is probably not foreshadowing much of anything. We shall see. Gold was about flat, had kind of a marginal week, down about 0.5% after the big correction recently, but has since stabilized around $4,000 an ounce. And crude oil backed off about 1.3, and Bitcoin had a very wild week, going down sub 110, and before rallying back and closing, I think, right around that area, around 110 at the end of the week. And you can see by the end of the week, the net change was just under 3%, which is really not that much for Bitcoin because it is pretty wild. All right, so that is our weekend review. Kind of take it together, if you can, with those ruling reasons. Put it all together. That's kind of the reasons kind of pushing the markets, but most importantly, now we're going to get into what's really going on, where we'll see how all of the above that I just talked about translated into the charts, which is, of course, most important. Okay, what's really going on? Let's get into some charts here of the broad market. Today, Friday, October 31st, Halloween, was quite interesting to me in the sense that we had back-to-back days of gap up and test of the 8 EMA, neither of which broke. Look at that. This is in the S&P cash market, and the futures don't look too much different. So what's your key level for tomorrow? It's got to be, or Monday rather, it's got to be the low of both these sessions, given that they're both kind of equal. It has to be. What else can it be? And we had a pretty decent sized bounce into the close here a little bit. And you can see how the low of the S&P in the cash was 68.20 on Thursday. And then it was 68.14 on Friday. So you actually had kind of like an undercut. And I think the support came in because of this 8. You just basically supported on the 8, ripped it higher a bit and closed here. But your action point, for lack of a better word, is going to be pretty obvious next week. It's got to be below the 8, which I think is a short. And then what you're going to be looking for is to be seeing how does that short navigate these highs here, because this is probably where the market's going to be pulled to, down to about this 67, 66 from the 68, 20, 68, 15-ish, as I was saying, which is not that big of a move, but I like to take it in small chunks, and that's what I'm seeing is we're probably coming into here. And then we got to see if there's actually trend line break or not, and then it puts the 21 in play. But my main takeaway here is that this is a relatively rare occurrence, basically, that you would have two sessions that would interact with the 8 in the exact same manner, meaning both days gap up, fall to the 8, gap up, fall to the 8, right? It makes sense because you had all these Mag 7 earnings Wednesday, Thursday, and that's what caused this, basically. So those stocks moved up and then fell back down. In the NDX, similar, but you didn't get to the 8. You can see that you're much stronger here in that neither of those sessions actually made it. And that corresponding flat area would probably be right around here, I would say, right? That would be that flat area that I was talking about in the S&P. So there's some potential that we could move lower, but if you're not going to get down below the 8 here in the NASDAQ, what's the point? And one of the things that could happen here, which is very, very tricky, I talk about this all the time. This is something that I figured out a long, long time ago and has kept me out of a lot of trouble, is that if you short the S&P on that signal and it starts to move aggressively lower, it's all good. But you may have to cover that short when the NDX hits the 8, because these two are out of sync. And what's going to happen is when the NDX comes down to the 8, there's going to be natural buying occurring at that level, and that's going to pull the S&P back up with it. So keep that in mind, which is very, very important if we have that kind of signal and movement next week. Now, I do want to show you some monthly charts before we get off these charts of both the S&P and the NASDAQ. But one of the things that I want to discuss back to this daily, and again, I keep bringing you back to the whole ruling reason thing. This video is really all in a nutshell about that first screen I showed you, about the push-pull of the news flow. And one of the things that I feel is very noteworthy about that push-pull of the news flow is it feels to me that in the short term going forward, and I can't really speak to the whole end of the year, but let's just say going forward, next 1 week, 2 weeks, whatever, there can always be new catalysts coming up that are going to change the tone. But it appears to me that with Mag 7 earnings out already, and we got the results, and many of them were very positive and had gaps up, like strength like Google, etc., and Apple gapped up, although it fell, etc. And that's done with. And now we've got Powell, who is not done yet. We've got a meeting in December, but basically the odds of the odds of a cut in that meeting have fallen drastically. We'll get into that a little bit later in the program. My thought is, what's the catalyst here? Like, what's going to be the ruling reason next week to get this market higher? And most importantly, can it make another all-time high? You can see how when we rallied here, it got very parabolic in that it went up to the outside of the channel. We actually went outside of the channel, connecting these highs, and you pushed out to it, and you weren't able to close above it, and you closed just slightly below, and then you fell. And so my take, to be honest with you, is that I think the market is going to struggle here to make a new all-time high. And if it can't make a new all-time high, and we just go a little bit sideways, and these momentum players are not getting paid, then you have the potential of the move to here. And I'm thinking that's what could bring S&P down to that 6750 area, which is that flat line breakout area. All right, so keep that in mind. That's kind of my main takeaway of this show, is that with the news that we already know, and knowing that there's not much else coming, like, is the tariff situation, for instance, going to improve so much that it's going to push the market higher? I doubt it, right? That's what we saw on Sunday, for instance, was the big move higher, which was this day, right? That was the Sunday tariff gap, the Sunday night. And then we went higher for 2 days, and now we're actually below where the open was of that tariff gap, right? Of that news on Sunday night of the, calming between U.S. and China, and possibly forestalling that extra 100% tariff. So kind of keep that in mind. All right, let's wrap up on these monthlies here, since it is the last day of a month. I don't have too much to tell you here, other than when you look at monthlies, you got to keep it simple and just kind of count the months. How many months was it up in the past? How many months are you up now? So look at this rally here. This one was 1, 2, 3, 4, 5 months before a pause. This one was 1, 2, 3, 4, 5. 1, 2, 3, 5 months, and then it's actually 6 months, because the 6th month made a higher high with a pause. After then was a pause. And this one is 1, 2, 3, 4, 5, 6 months straight up so far without a pause. Now this one here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This was 10 months of all higher highs. So we're getting into that area where there could be a correction. But again, monthly charts are just hard to discern, because there's a lot of noise inside of each bar, right? If you want to trade super long-term core position, then obviously you could just be trading just off the monthly charts. But be prepared to keep a very, very loose stop on something like that. And same thing in the NDX. You've got 1, 2, 3, 1, 2, 3, 4, 5, 6. So you're in your sixth month, here up as well on the NDX. All right. So that's basically it. That's the week in review, and also the what's really going on for this week. And again, my main takeaway here is you got the push-pull of news, and are there going to be catalysts on down the road in the very near future that are actually going to push this market to new all-time highs and keep the momentum players happy? And if not, is that going to bring in some selling if we struggle here and aren't able to get up to new highs again? All right, let's get into a little market profile, because there are some nuances here that are underscoring what I've been talking about. Obviously, this show has a theme talking about the ruling reasons and the nowhere market. And the market profile is confirming that in a big way, in that We have lots of important stuff, for lack of a better word, below us, such as 2 unfilled gaps and virgin points of control, etc. And even with the weakness that we saw coming off the highs on Thursday, Friday, whereas we were just talking about, we gapped up and fell again. Neither of those days were even able to fully fill the first large gap that was underneath us, the one that was caused by the Sunday night US, China, etc., big gap up, right? So that remains unfilled to a degree. So let's take a look at that a little bit closer, right? This is the price action of the week. You can see here, this is the gap in question that we were talking about, the 5 days of the week. And here's the Sunday night to Monday gap as illustrated here by the green arrow. And notice that there is still a portion of it unfilled. This is a classic WWSHD, like when what should happen doesn't. But it's also something that just makes the market much more difficult because these are targets for where the shorts should go, and then they don't get there. It tells you that the sellers aren't as strong as they could be. So this here, I marked it off as was the RTH low coming into Thursday. That was the top of the gap because you can see this portion of the gap here was filled on Thursday, leaving us with this gap. And then on Friday, it filled this much and just left this little piece right here. So now our top of gap is actually going to move right to here. So this is going to be a key level going forward. Remember that this is important to continue to fill that. Of course, prices closed here on Friday, so you're nowhere near that. So, it'll be probably a little, we'll see what happens on Monday or whatever, but you're not there. But regardless, that is just one of 2 large gaps. The second gap is here, also remaining unfilled. And I like to think of these gaps unfilled as just kind of telling me that momentum longs are in control. Basically, that's it. They're strong. And you've got virgin point of control here from the 1024 session that has not yet been tested. And if we keep going a bit lower underneath the gap, there's also virgin point of control here. I'll make sure to refresh this so it's correct. But you've got virgin point of control as well from the 1023 session here that hasn't been tested. If you look closely, this overnight activity doesn't count. Overnight activity does not correct any type of market profile nuance at all. It has to happen in an RTH session, and lo and behold, you've got this other large gap below us. So I would say just kind of keep marking all this stuff off. I like to use the word signposts, right? If there's going to be shorts and it starts to get moving, nothing's going to happen unless you fill this gap. You have to get to here first. And then I would watch very closely to see, can you at the very least get to this virgin point of control and knock that out? And then you get to the next gap, and then you see if you can get inside of that gap. And of course, as always, and this is the beauty of the market profile, is that very often you are looking at nuances like a virgin point of control or something like that that are not apparent on regular candlestick charts or single prints or things like that. And even the gaps, because remember, we're looking at the gaps of just the RTH sessions, which if your futures are on a 24-hour chart, you're never going to see that. So we're looking at, because the gap only matters of the 9:30 to 4 p.m. part of the session, and that's very, very important. And also, it's very helpful the way that we look at the market profile, where we're always separating out what are the overnight sessions, so you can see what is the overnight activity and what is the day activity, and always putting a lot more weight on that day activity, all right? So my main takeaway here on the profile, just to wrap it up, is that value was unchanged on Friday. You can clearly see, so that tells you that kind of a whole lot of nothing was going on. It was overlapping to down, but not really enough of a shift there to be meaningful. Remember, the more meaningful shifts have what we call clean and breakaway value, where you have value area here, and then you have price action down here, and the value area of the second day is down here. That yellow portion is here, and it's far away. We call that clean and breakaway, where it's not overlapping at all with the other session, and that tells you that the market has had a paradigm shift and has completely reestablished where it feels that value resides, in a completely different place that's completely separate and exclusive from the prior days. But we're not seeing that. So watch for that as well in subsequent sessions. Remember, if you don't have market profile software, one of the best things you can do is either sign up for my Peter's Premarket Perspective newsletter, where I give you a snapshot of the profile every day, plus a short video every morning where I talk about how I feel about the markets before the open through the lens of the market profile. And then, of course, also weekly options room, which is my trading room that I moderate every single day for the first 2 to 3 hours of the day. I do answer questions the entire day and put out live trades, but I'm actually on the air just for the first 2 to 3 hours. And in that room all day long, whether I'm on the air or not, I always share the profile live. So you can check that out. You can see this as it's actually unfolding and building. And that's, of course, a fantastic value to be able to watch that all the time. I have it on a separate screen. I share multiple screens with all the subscribers, but one of them is always dedicated just to this market profile. And I've got it on a portrait mode, which is kind of cool. You're seeing this here in landscape, but in my room, I've got it on portrait mode, which is really cool because then you don't have to, scroll up and down to see things. It's all very, very clear. I can make it as big as I want. So you can see the volume at price and everything, and you see all of this moving and shifting over the course of the session, right? So if you want to check all that out, links are in the description below. Okay, a little bit of Fed Watch real quick because we did have a meeting this week, and as always, it's never what happened, it's always what was said. And in this case, the key takeaways was, of course, Jerome Powell saying that the December rate cut is not a foregone conclusion, even adding the phrase far from it. So that's very, very important. You can see by the chart that I'm showing you here, the odds dropped precipitously of the December cut down to about 63%. This was literally at like close to 100% before that. It was known that we were going to get basically the cut we just got this week and another at least 0.25% cut in December. And there was even a little bit of odds before that was said that we would go down 2 levels and get a 0.5 percentage point all in one meeting. Notice how that's completely changed now, where now the odds of that cut in December just going down a 0.25 point is only 63%, and there's 37% chance that we actually stay the same, right? So obviously market keys off of all this, so just something to keep in mind and see as we develop further, closer and closer to that December meeting, which is going to be on December 10th, as you can see here, how these Fed funds futures change. We'll check in with this again just before that December 10th meeting, and we'll see what these percentages look like then. Okay, as always, last segment of the day is looking ahead. As you can see, no economic data because we're still on government shutdown mode. And I know there's some stuff that trickles in, but honestly, I don't really know what's happening and what's not happening. So I don't want to confuse you guys. I'm just going to stick with the earnings here until this shutdown is over, and then we'll go back to talking about what data is coming. As you can see, earnings are they're still hot and heavy, but the tech stuff is kind of starting to wrap up. And you'll notice a lot of this stuff is just spread amongst lots of different sectors. But one of the key takeaways I think is going to be definitely Palantir in the beginning of the week. That is on Monday. And any hint of a slowdown in AI spending, okay, or any hint of a slowdown in growth could bleed into some weakness for the whole rest of the market. So I would watch this one very, very closely. All right, beyond that, Williams in the natural gas space, Spotify in the music space, always a good one to pay attention to. Very expensive stock. It can definitely move. Wingstop has been beaten up so badly as of late that I think there could be some bottom fishing going on in that market. I'm going to be very interested to see how their earnings report affects the stock price. Also in the same category is Yum Brands in the QSR, I guess they call it, quick serve restaurant, I guess, right? Yum owns Burger King and stuff like that, I believe. Pinterest and Rivian, electric car maker. Wednesday is going to give us McDonald's, Sunoco, AppLovin, also in kind of the tech AI space, Lucid and Qualcomm. Qualcomm also very, very important. ConocoPhillips in the gas space. Another restaurant one, and then DraftKings and Wynn Resorts. Remember, this is by no means a comprehensive list, just ones that I'm paying attention to that I feel are tradable, but in no means, representative of what's going on in the whole market, obviously. But again, just the stuff that I think that you should be paying attention to. But my main focus here, if I had to just pick one, it's got to be on Palantir. It's got to be Palantir on Monday. So watch that closely, and more importantly, of course, not about the news, but how the stock reacts. And that's the show for this week. Thank you so much for spending a little bit of your time with me. If you could, please hit the like and subscribe buttons because it does help the channel. Also, the little bell icon to be notified whenever Shadow Trader posts new content, which is every day through our Shadow Shorts videos. If you want to get those via email, that's how they come out. Just put your name and email address on our homepage at shadowtrader.net and you'll start receiving those nightly. All right, let's recap a little bit of what we discussed in today's video. It is called, specifically for a reason, ruling reasons and the nowhere market, because that's what's going on. You have different ruling reasons every day that I feel are sort of push-pull and contradictory to each other. Like, for instance, Those Mag 7 earnings bullish, but maybe we're not getting an interest rate cut in December. Not so bullish. And, you know, the tariff stuff, it's a lot of cross currents. I would be very, very careful out there. You know where the key levels are. This week, Thursday and Friday, you tested that 8-period exponential moving average twice in the same manner, meaning Thursday and Friday, gap up, come down to the 8. Friday, gap up, come down to the 8. So what obviously is your key level on the downside next week? It's got to be that 8, which is the Thursday, Friday low in the S&P, all right? Keep it simple, as I always say, all right? Beyond that, try and be careful out there. Remember, you don't need to be trading all the time. And if you are trading and there is not a clear signal, as we're seeing now with a lot of very, very violent reversals intraday, you can always not trade or trade much lighter. So that's kind of my closing thought on this video, all right? Thank you for watching. Great to be with you all the time. On behalf of myself and, of course, the entire ShadowTrader team, me personally coming at you from beautiful Los Angeles, California, I wish you good trading and good night.